Fergal, how have down payments for mortgages developed since 2014?
For the average three-bedroom property, we see a stark delineation between Dublin and the rest of the housing market. Outside of Dublin, down payment requirements have increased by in and around €5,000 or less in all cases. However, within the capital, increases of 10 to 22,000 euros have been seen in all areas apart from South County Dublin, where increases have been in the range of €40,000 for the average three-bedroom property.
Tell us about time to save for Dublin properties compared to other urban areas and then compared to non-Dublin, non-urban areas, please.
So here, Paddy, we're talking about a couple renting a two-bedroom property while saving to accumulate the down payment for a three-bedroom property. And what the analysis suggests is that the housing market can be divided broadly into three areas. Within Dublin, time to save estimates are between 2.5 and 4 years, depending on area. In other urban areas, we see time to save of between 1 and 1.5 years, whereas the situation appears more favourable for borrowers in non-urban, non-Dublin areas, where all time to save estimates are under 1 year.
And how has time to save evolved since the introduction of the mortgage regulations in 2014?
So here we're comparing mid-2014 to mid-2016, and what we see is that within Dublin, those numbers that I previously discussed represent an increase of roughly 1 to 2 years, depending on area, whereas outside of Dublin, time to save has increased by between 3 and 6 months in all areas.
So what factors have an impact on time to save?
So time to save is impacted both by the ability of households to save and by the amount that they need to save. On the ability to save side, we have seen increases in rental prices, which of course for a given income level are going to impact the amount of saving capacity of a household. So since 2013, we have seen double-digit rental increases in Dublin, and more recently in 2015 and 16, similar increases outside of the capital. On the amount required to save, the most obvious factor is house purchase prices themselves, which have been increasing at rapid rates in 2013 and 14 in Dublin, and again more recently outside the capital. Increases of 8 to 10% have been common outside of Dublin in 2015 and 16. Finally, on top of increases in house prices themselves, the recent introduction of macroprudential housing measures by the central bank has increased the proportionate requirement for a given euro house price for first-time buyer purchasers.